My friends, what is going on? Welcome to this week's video. So you know the deal. I threw out there on Twitter that if you guys would do the 1,000 likes, that I would throw you a video of setups that I'm going to be watching into this week. You did your part. It's time for me to do my part. So here we are. Before we get started in the video, you guys know the deal. Nothing about this video is financial advice. I'm just trying to give you great setups so you can make great trades for yourself, your family, and your portfolio. Please do your own due diligence, all that kind of stuff. My personal opinion is if you're just blindly following somebody on YouTube or X or anything like that anyway, you're doing it wrong. I absolutely think that it's great. This is what I tell my Discord all the time. That what I love so much about the Discord is we got so many good minds focusing on so many charts at a time that, groupthink is good when it comes to the market because people can play devil's advocate on what a stock is looking like. Myself and Bronx every single week, that's what we're doing virtually every single day, is running down all different stocks and charts. And there's sometimes I like something, he likes something, or vice versa. We're not afraid to cuss and discuss and hash it out. But that's how you find great setups, and you're never going to be able to spot everything. So that's what I love about both the Twitter and the X community, is everybody's looking at lots of different charts at the same time, plus with the Discord. So I hope I am a piece of your puzzle to help you out when it comes to trading. That is certainly the goal. And I put on Twitter yesterday, like, unpopular opinion. I mean, it's just a lot of people have made a lot of money over the last 6 months. And number one, that is awesome. I'm always happy to see people be successful. But number two, I've seen a lot of posts about just like, oh, I'm free to like go sit on a beach and drink pina coladas. And man, that's a crazy way of thinking. I was like, dude, I like work. I think you become a lazy, unproductive member of society if you're not working, if you're not grinding. I said, this is going to be unpopular, and it wasn't. A bunch of y'all liked it and agreed with it. So just like I don't have to be sitting here making this video right now, I enjoy it. I enjoy helping others. I enjoy helping myself. I think if we all adopted more of a like, hey, let's get after it and let's help each other, I don't know. I just think this world would be a better place. So there's the rant to start the video. So let's jump into why you're here. I apologize. Next week, overall, relatively light on the economic side of things. On Wednesday afternoon, we do have the Fed minutes that are going to be released. Now, remember, those are the minutes. So that's like the notes of the meeting that they just had. This is not going to be pal talking or anything like that. It's going to be basically just, we're going to see what the internal memo was of the closed door meeting. Now, Powell already came out, gave a speech, all that kind of stuff. So that'll usually just lead to some intraday volatility. So if you do have any short dated options going, you want to make sure that you understand that the Fed minutes are going to be released Wednesday afternoon. But just like last week, very light overall on the economic calendar. So typically on those type of weeks, this is where we're going to see that overall trend continuation. I said overall last week, I felt like would be a very kind of like low volume, slow grind up style week. And overall, that's what it was. The index is finished basically slightly green across the board. So I'm not going to spend this video talking too much about the indexes, because overall they've been relatively choppy. They have been relatively choppy, but we've seen really good outsized moves on stocks with really good setups. So that's going to be what I'm going to focus on. So having said that, let's jump in to the charts. Number one on my list, and when I say number one, I'm presenting these in no particular order, guys. They're just really good setups. This is a stock that I pretty much never trade, and this is going to be SMCI. However, a good setup is a good setup, and if you follow me and you do trade SMCI, I always tell you guys how I look at one chart is how I look at every chart. So I don't really care what the company is. If it's a good setup, it's a good setup. So SMCI, in my opinion, has a fantastic setup. If you'll notice, we have this huge rounding out bottom from the large gap down that we had post their earnings. Then SMCI made its way down to the 200 SMA. That's going to be the red line here on my chart. Traded around it, could not get below the 200-day moving average. Also down here, that's where your lowest volume took place, was while it was trading around here at the 200-day. Then you had a big volume push off the 200 SMA, followed by a lot of chop. But the entire time that you were in this chop, if you'll notice, you were putting in higher lows and higher highs every single time. Then you had the big breakout candle on Wednesday, October 1st, followed by 2 lower volume consolidation days. So I think SMCI is a prime candidate to catch continuation. If you do get a pullback, I think anywhere between 46 to 48 is a fantastic risk to reward ratio for entering a long side trade. And when it comes to trading, guys, your risk to reward is what it's all about, because you're gonna be wrong sometimes and you're gonna have great setups invalidate sometimes. So I'm always telling my team, I plan on being wrong 30 to 40% of the time, which means I'm only right 60 to 70% of the time. And that still means you're wrong a lot, right? So when you are wrong, it's okay as long as you're taking good risk to reward setups and you can allow your runners to run. If we back out here and even take a more macro look at SMCI, this thing has been in a daily downtrend for a long time. Then you had the false breakout here. You had earnings. You came down here. You pretty much rode that trend line, and now you're starting to push up. I think overall, pretty much all the chip stocks look great right now. I expect them to continue running. They've kind of cooled off a little bit. Say what you want about NVIDIA, but overall, it really didn't go anywhere for 3 to 4 months. I mean, basically since all of July, August, September, and it's just now starting to break out in October. So I think NVIDIA looks fantastic. I think anything to a 183 to 184 pullback, another one, a great risk to reward long setup. But overall, we've got this inverse head and shoulder down here that was that big rounding bottom that I was talking about. You've got your breakout. So any pullback to retest this in this 48 to 46 level, this daily order block candle right here is a fantastic risk to reward to get continuation. Now you may not get it. Another way that you can do this is what we call riding the 9. So on my screen, the daily 9 EMA is that white line. We see this all the time where all it takes is a daily 9 to kind of catch up. You allow your EMAs to catch up, which basically just means what the stock does is it goes on a massive run and then it consolidates for a little bit and then it goes on a bigger run. Your moving days are much less than your consolidation days. A stock will typically do nothing or consolidate about 70% of the time. So that 20 to 30% of the time that it is moving is the best time to take your option trades and when it is trending. If you're taking your trades off of higher time frames, like the weekly, like the daily, it's typically best to either buy yourself a ton of time, buy yourself leaps when it comes to options, or just buy good old-fashioned shares. They don't expire. You're not fighting any time issues. It's great when you're in short-term options and you catch a moving day. That's when you make really outsized gains where you can make hundreds of % gains in a day. However, that's harder to time. If it were easy to make 100% gains all the time in the market, everybody would do it. So if you see someone who's always constantly posting, this week I had 1,000% banger on this one, 4,000% on this one, 5,000% on this one wasn't very good. It was only 800%. They are a liar and a scammer, and stay as far away from them as you possibly can. That is financial advice. You can quote me on that one. Those of you that follow me for any amount of time know I've made a lot of money, fortunately, but doing it on like 30 and 40% gains. I know it's boring, but it gets the job done, and that's what I care about. So SMCI, I think looks fantastic right here. If we get down to the lower time frame, we can see that it's pretty much given like a flag out consolidation look, bounced off your hourly EMAs, pushed up towards the end of Friday. So I think this one overall looks good. Might consolidate a little bit more here right? Because that daily 9 still is at 49 and stock price is at 52. So may not just run like right off the rip, but it's certainly one that you should keep, maybe by Tuesday or Wednesday towards the back half of the week, like maybe after the Fed minutes are released, if this one is still trading sideways, or better yet, like I said, Monday, Tuesday, or Wednesday, you get that pullback to kind of retest the breakout and you continue going. If you do start to get below 46, I'm not going to like this setup at all. I would then wait and see what happens if you get down here to the 200 SMA. But even if, let's see here, let's just throw this up here. Let's say you enter, we'll go right in the middle of this order block at 47. You play it back to the high. You get out. If you get a daily close below that candle, it's a 6-to-1 risk to reward ratio. Bingo. Exactly what we want to see. Industry standard typically says you want a 2-to-1. I personally prefer that my trades have at least a 3-to-1 risk to reward ratio, but to each their own. Like I said, you do what's best for you, fam. The next one I want to talk about is Lyft. Lyft is one that started out last week on Monday. It gapped up, had a very nice day, and then consolidated the rest of the week and overall kept trading sideways. It is still technically riding that 9 daily EMA. The reality is let's go back to the weekly here real quick, right? Like if you look at the weekly, after you had the huge breakout candle, it looks just like what I showed you on SMCI, right? Where you have the huge move and now you are consolidating. So I say give Lyft, I would continue to watch it on the weekly. This is another one that I've said repeatedly. I still think the best way to do it is either shares or leaps. But as long as this weekly continues, you had the super high volume push week, low volume consolidation, you're basing above, this huge rounding out bottom. Like I said, it's just a much more macro version of, like I said, the SMCI chart. So I still love this look. Staying above 20 is completely fine. Even if you dip below or back into that, right around that 21 to 20. I don't think that's going to happen, but even if you did, I still feel very good about those dips being very buyable right now. This is probably going to turn into something, like I said, that just continues to kind of flag out, kind of do a megaphone before breaking out. A very similar example is MU, right? Big move, consolidated into this megaphone. Now you're catching the breakout. Even though you had a couple of days that closed below that daily 9, the 2 days that it did are some of your lowest volume days in here. So that just tells you it's not aggressive selling or anything like that. And more than likely, you're going to catch trend continuation. So I still really like the look of Lyft, especially with everything that's going to be going on between robo-taxi and all the ride share and stuff. Okay, Unity. It's an interesting one. A setup that I don't see too many people ever really talk about on Twitter are what are called bearish and bullish sandwiches. This is going to be a bearish sandwich is 2 large green candles mixed in with a red candle in between. Bullish sandwich, 2 very large red candles with a green candle in between. So overall, Unity is, I don't love that it lost kind of that 40 and the 38 level. But what I do love down here is the fact that this sell-off that happened, that we had increasing volume on, then we had the green day, and then we have another red day. But overall, the volume is staying low. So this is starting to give me the same vibes that I talked about before with Tesla and other names that we're kind of getting a selling climax going on in here. The main thing that we don't want to see is we don't want to see a bunch of new lows from here. As long as we stay overall relatively above or right around the lows of this big ugly volume candle, that overall is going to tell me that the largest selling pressure is over and we'll be getting ready for trend continuation. Same thing, this is one that I'm just in shares on, but if we look at it on the weekly chart, it's certainly not a good look that it closed below this 3 previous tops right here on the weekly. But overall, as long as we stay above about 35, I still think the overall trend is intact. And for sure, the overall trend is intact if we stay, what was that low? Yeah, 30. So for sure, the overall low, trend is intact. We've been making a series of higher highs and higher lows. So our last major swing low was back over here. So even if we came down here to like 32 and then started the next push up, we just don't want to see like a weekly change going on here. If you'll remember on Twitter, I posted coming up here to this 47.20 to 50.03 level was going to be pretty sticky, and we've run into some issues up here. But overall, I still think the stock looks good. The next big area that I would be personally looking to add is back down here in kind of that 35 to 30 range. Right now, I'm still just sitting on my shares that I bought around 28, and I'm just chilling. And there's my computer freezing up. Let's see what kind of goofy face I'm making. Okay, it's not too bad. We'll just keep rolling on in the video. Sorry about that. I have no idea why my OBS will just randomly freeze up on my picture. But anyway, we march on. So, Unity, I want to see some life and start to curl back up this week. So it can continue to kind of trade sideways. And then overall, we want to see that curl start to come in. We always call it the J hook look, where it basically you're making the letter J, you come down, build out a base, and start to curl back out. Once again, just like what I showed you with like SMCI, Lyft, other ones like that. Another name that I think looks good is going to be Rocket Lab. We have been watching this one, and it's been frustrating to be honest. I haven't traded it at all, but I know some people have, where it just keeps coming up here and you keep getting above this previous high that was made in July, and things are kind of looking good, and then immediately gets sucked right back down and curls back out of it. So, but now we are seeing a sustained volume move. Also too, it came down here and it just continues. So this blue line on my screen is your 50-day simple moving average, and it just continues to find support. Also, what do we notice? We notice a higher low every single time on it. Now we're getting sustained buying pressure and breaking out. And the fact that this thing is breaking out of a 77, so 2.5 month consolidation, you know, the longer the base, the bigger the potential move can be. Those of you that have followed me on Twitter, which you haven't done so already, please do that. Colin_Gladman. ASTS, I posted about this one. So we had the head and shoulder breakdown, but you saw as soon as it broke down, immediately buyers stepped in. And then the very next day, this is what I'm talking about with the Unity, right? So the very next day still looks ugly. A lot of volume comes in, but you overall held the lows. Then low volume, low volume, low volume. Buyers start stepping in. This thing overall starts ripping and moving. So I think Rocket Lab is overall just a little bit behind ASTS. I expect a nice breakout here on ASTS, and same thing. So you had the you had the three real big trend days right here, and then low volume on your pullback, rode the daily 9, color change, trend picks up again. Exactly what you want to see when an overall stock is trending higher. So Rocket Lab, I think, looks really good. The markets remain strong next week. I would expect Rocket Lab to continue. Any pullbacks here towards these previous tops around that like kind of 53 level is another opportunity to go long. So even if it goes ASTS right here and kind of chops and bleeds down a little bit, let it curl up. Overall, I would be very surprised if this thing is just all of a sudden gets sucked right back down. That's what happened here when they came out with potential dilution news and everything like that. You scare people off. But I mean, this is the exact same thing. That low volume, just like I talked about with SMCI, right? This is on the 50-day. With SMCI, is on the 200-day. All that volume got sucked out and just chilling, and then big bounce. All that volume gets sucked out right here, big bounce. Memorize it. This is why I say how I look at any chart is how I look at every chart. Yes, every single stock out there will kind of have its own personalities, but these are just some universal rules that you need to have ingrained into your brain, so to speak. All right, sorry, moving on. Next one I think looked really good. Apple. I said this one, I fully expect to make new all-time highs. I said that like 2-3 weeks ago. I mean, we're almost there. I mean, I would be very surprised if this one doesn't. Very similar to a lot of these other setups. Your huge volume comes in on your moves. You have your breakaway gap with your continuation gap. Then you trade sideways. The daily 9 catches up. This is what I'm talking about, like with Lyft and SMCI. That daily 9 catches up. The first time Apple touches that daily 9 after its breakout, nice volume comes in. Highest close in, since all-time highs? Yeah, highest close since all-time highs back in December of 2024. You've overall essentially got this little ascending triangle look going on where you have flat top resistance. You're making higher lows. This thing looks really good. I really like it. Now, when you get those huge, massive moves in Apple, like what we saw back here at the end of August, it's one of the most heavily weighted stocks that are out there. It's just not going to be one that just rips and just keeps squeezing and going and going and going. Anytime Apple has these large moves, you will consolidate for a while. Before then, you have 2 days where you had a huge move, then lots of consolidation. So this one kind of leads me into it shows sort of just the overall strength of the market. If Apple is trending and trending higher and reports of iPhone sales are still doing well, this is going to be one it's hard to bring down, and it's going to be hard to bring the overall market down. The reality is Apple, when we really zoom out here, it hasn't gone anywhere in basically a year and a half to 2 years. So if this thing really does start breaking out and start moving again, it's really going to move. This situation is very similar to Google, right? And I think Google is cooling off for another move higher. But when this thing has basically gone nowhere for forever, same thing, July of 2024, it's gone nowhere for forever. Once it does catch its big breakout, it's probably going to trend that way for a long time. So ignore the people that are calling tops 24/7. And even if we are going into blow off top mode, make money while it's there. Like, I don't know. I'm not going to make money because this is a blow off top. I mean, one of the most retarded things that you could do. Like literally. Sometimes when we say literally, we don't mean it. But that is literally one of the most retarded things you can do, is not make money in a blow-off top. You can never make more money faster. Now, the reverse is true. Yeah, if it is a blow-off top and we see this next generational depression or whatever, which I don't believe. I just don't believe it. History wouldn't say that that's what's going on either. History and or data. Then yeah, you'll probably lose some money on the way down, but if I give you 10 quarters and later on take 2 away, you still did pretty well out of the deal. So, yeah, I don't know. Don't listen to idiots on Twitter. Once again, financial advice. Quote me on that. Okay, the next one that I want to talk about is going to be one that I've never talked about before. I haven't posted on Twitter, nothing. And honestly, I don't remember where I saw it, but I actually saw it on CNBC when I was watching, because when the market was pulling back pretty hard, I was like, what's going on? Because I usually hate to watch stuff like that, but I was like, I feel like I'm not seeing any headlines. The market's pulling back really hard. I'm going to turn on CNBC, see if I'm missing something. And a guy was talking about it. And normally I kind of take those things and just, like I said, if analysts are like, oh, buy this one looks great, I'm usually like, yeah, whatever. But anyway, dude brought it up, and while I was sitting there, I was like, I'm going to pull up that chart. And I did, and I was like, dude, this actually is a really good looking chart. I like it. And it's still relatively cheap. It's a great one that you could potentially buy shares on. And that is Archer Aviation. If you look at this thing on a weekly basis, just like what I talked about on my video with QS, we have a stock that IPO'd back in 2021. and it's just gone through a huge accumulation phase. But once again, this volume cluster that has come in here is just massive. Same thing on QS, right? That's what I talked about. All this volume that came in here. That isn't me or you. That is big boys buying it. Now, I'll be honest, I quite literally know nothing about the company, but I love this look on the stock, especially when it just had a weekly double top back in July of 2025 and pulled all the way back. I obviously know that doesn't look like a lot on my screen, but it just went through a 40% pullback. But what do we notice on our volume analysis? So huge volume push right here at the middle of July, and then it dropped. But what do we notice about the volume? The volume gets completely sucked out. In the bottom, there was minimal to no volume here. This shows seller exhaustion and or buyers who have been buying the dip are also no longer buying. And remember, the market looks for liquidity. So when that volume gets sucked out and there's no more pressure to go down, stocks do what? We go up or we go down. So now we're starting to move up, and let's go to the daily. We have very similar setup where it cleared the 200 SMA on nice volume, then came down and dropped below. But all these big ugly candles right here, what do we notice about the volume? The volume is very, 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 very low. And then as we start to curl up, we have increasing volume. And now we have a breakaway gap over all this level of resistance. So that $10 level, that key psychological level, anytime you go from the single digits to the double digits, that's a big key psychological level. You gapped up, huge volume pours in, all these previous internal tops right in here, you cleared it. So very similar to SMCI, could start trading around and kind of build out a flag or a bullish rectangle, something along those lines, allow these EMAs to catch up. It did just have a 13% day on Friday. Now, you will catch some days where it'll just be back-to-back huge days. But honestly, that's not the most healthy thing a stock can do. The most healthy thing a stock can do is have natural moves upward, where you get a nice push, followed by consolidation, followed by a nice push. I always use the analogy of think of it as like a lung breathing in and out. So it's just when you're breathing out, right, and that you're using all your momentum and your lung is pushing out all that air, and then it's got to expand again. You got to take that deep breath in. So think of stocks consolidating as like taking that deep breath in before having enough energy to then push out again. So this thing on the daily looks fantastic. If I still feel good about the overall market, it's another one that I'm going to take a share position in, but I want to be clear, I do not have a position right now. Also, what I love about this is, yes, it came up here and it did that daily double top that I talked about, but overall, we are noticing significant higher lows throughout this while we've had flat top resistance the entire time up here in that 12 range. So the more times this liquidity gets sucked out, and so every time you come up here right now, we're finding huge sellers and reasons to push that stock back down. So now we're coming up for the fifth test of that. So just like when sellers get exhausted on that move down, eventually you're going to push right through that liquidity, and when you do, you can catch a very nice outsized move. So I love everything about this look on the weekly. I think this is absolutely going to be a winner. I really do. But like I said, I'm just talking about the chart. I know nothing about the company. I'm going to do some due diligence on the company. Also, too, on the weekly, notice last time you had a 921 weekly cross down, and it basically was a fake out, and then it crossed right back up. Just from the cross up, it made a 80% move in the stock. So apples to apples, right from the cross up, an 80% move. Golly, gotta zoom up on the screen a little bit more. Is sending this thing up to 18. So I absolutely love this. I love the weekly look. If this was a 15-minute chart, I would be jumping in lots of calls. I really would. I love the look of this. Now it is up here approaching that resistance, so that, I wouldn't take like a bunch of short-term calls. But if this thing, I will say this, if this thing kind of consolidates and just chops around here in this 10 to 11 range, it is going to be something that I take some calls in, even if it's just a swing trade. But it is, which I think it probably will be, but I can't say it enough. I love the look of this stock. I could be wrong, but I mean, this is Palantir, this is Hood, this is Coin, this is SoFi, this is, so many stocks that bottomed out look like this. This one looks great. Cannot say that enough. Yeah, volume push up here, low volume consolidation. Then when volume comes back in, pushes up again, low volume pullbacks, continues to push. This thing, yeah, this thing looks really good. I absolutely love it. All right, let's move on to another one that I absolutely love. So first off, congratulations to anybody that's in QS with me. We're chilling at 30%, and you had many opportunities to enter in lower than even what I got into. But let's go to the daily. So we finally had our bull flag within a bull flag, our bull flag inception moment, where we had the push. This is where I first did the video, right around $12. So yeah, you had a day where you could even buy back in the 11s, 11.49 back over here. But same thing, it's just riding the daily 9 right now. I'm not even going to consider exiting my position unless we start to lose some key moving averages. For me right now, that's going to be really around I am treating this like a swing trade. It's not a stock that I'm married to or plan on holding for forever. It is something that I am looking to swing trade, but as long as the swing is looking good, I'm going to be chilling inside of it. So the volume, once again, strong volume pushes, low volume consolidation, high volume pushes. Just like I said in the weekly video, I do think that there's going to be some trouble up here, especially when you're changing from the teens to the 20s. Like when you go from 19 to 20, I do think that there's probably going to be some issues. The strongest move that we could see on QS is going to be a break through the 20s and then start basing and actually show that as support. And then, yeah, it's going to continue. But the reason that I did shares is because it was a really good daily and weekly chart at the time that I entered. I also loved everything about it down to like the 15-minute chart. I still love it on the daily. I'm not adding to my position. I am just chilling, and like I said, it's a swing trade for me. So long as we stay above all like the 21 EMA and the 20 SMA, I'm just going to let the chart do its thing. This is purely just a chart trade for me, not I'm in love with the company, so I'm going to swing trade it. Some people have already messaged me, hey, I've already closed out my position. I was really happy. I made 30 or 35 or 40 or 20%, and that is awesome. From the video, let's see here, where it was 11 trading days, 15 days total, so 2 weeks, is, and you've made 32% on your money. You can't find that anywhere else on the planet, maybe unless you're a loan shark, but I don't know about that. But you can't find that anywhere else on the planet, my friends, unless you find it. But you can find it in the United States stock market, and you can do it if you really hone in and focus on your craft of finding these good setups, taking emotions out of trading, and making business decisions with your portfolio. And there are parts of that are easier said than done, but overall, just take A+ setups. Take A+ setups where the risk to reward is fantastic, and you're going to be doing all right in the long run. I really believe that. So to reiterate, just this move on this little bull flag right here, I'm expecting a minimum. So you see, we pretty much hit that 618 and we rejected off of that. We didn't close above, but we did close above our previous highs on good volume, and that showed a lot of relative strength. I mean, QS was up 11% on a day that the overall market was very choppy to red, and it even held up really well in the pullback. Yeah, I mean, like SPY and QQQ both closed red. IWM barely closed green, and QS had an 11% day. So this also goes back to the indexes matter, but just focus on great setups on the stock, whether they get the news or anything along those lines. And this was the day a lot of people were, asking me like, well, I had 2 days, both Tuesday and Thursday. Thursday, I was like, I didn't even respond to the message because it was so annoying. Is QS cooked? Yeah, bro. A 1.99% pullback the day after it had an 18% move topside means it's cooked. It's done. Will never recover. But that goes back to taking the emotions out of it. Like, just don't be an emotional child. You can't if you ever want to make it in the market. Risk to reward, once again. So, looking at this setup still, I still think we can push up here towards the 19 to 17 level, but then we're probably going to catch a pretty ugly pullback. But what I mean by that is we'll probably get up here and we might come all the way back to like 15, 16, come back down here, retest even around 14, 15 before continuation. Once again, I'll let you know if I do anything. As of right now, my plan is win. Yeah, we'll speak positive. Win and or if like I hit 100%, I'll probably take my initial investment off the table and let the rest of it free ride, and we'll see where it goes. But right now, I'm just chilling up. Give you the exact amount. So with the little bit of an after hours drip, I'm up 29.39% for a total of $14,434.80 in profit as I sit right now, and the chart looks great. So I'm just going to keep chilling. All right, let's finish up today with Tesla. So today I'm going to teach you guys what is called the Holy Grail setup in stock trading. So let's start with what is it? This is my favorite way to swing trade stocks. So the Holy Grail setup is basically going to be once the stock has broken above 30 on the ADX. The ADX is the average directional index. But once the stock has broken above 30 on the ADX, so the ADX is going to be this line that you see on the bottom of my screen. So basically when a stock is under 30, it's trending to consolidation. It's not moving all that much. Now, like a stock with Tesla, not moving all that much is still like 15, 20 point weeks. So it's still very tradable. That's why I love it. That's why it's the stock that I trade the most. But the Holy Grail setup is going to be when you have a good volume breakout and your ADX crosses above 30. So right now the ADX on Tesla is sitting at 43.68. And then you'll also see the green line on my screen. That green line is the 20 SMA. The 20 SMA is the 20-day simple moving average. So what the Holy Grail setup is when your ADX goes through 30 and the first touch of the 20-day simple moving average, it's a buy. What I love about this is it also checks a lot of other confluence boxes for me. So let's walk through all that as well. So, obviously, on Friday, so Tesla had the ugly bearish engulfing candle on Friday, and then it gapped up, and you can see I said if Tesla gaps up above 440, there's still a good chance it could close above 450 on Friday. So we did gap up above 440. Yeah, we opened at 443. But you can see right off the rip that morning, it came up and rejected right off of our previous resistance, which was right around that 440 to 445 level, and then it rejected. Then it sold off virtually all day. But if you'll notice, and if you go watch my previous videos, you'll notice that I've always had 414.50 marked off on my chart. The reason is because that is the previous all-time high from the OG Tesla squeeze back over here in November of 2021. Showing support above that level is crucial. Just like last time, we came down, we showed support, and then we had this huge day on Christmas Eve that Tesla completely squeezed out. Now remember, this is a half day. That's why that volume is so insanely low. But it could never find support up here. And then once that turned into a support resistance flip back over here in January, that's when it was like, dang, this thing's going to get ugly. We sold off, continued to sell off. Those of you that will remember, I made a video right here saying, hey, Tesla comes back up to like 360, 370 and finds rejection. It's going much lower, at least to the 200 SMA. And it wound up going a lot lower than that. A lot of that was contributed to the whole Elon Trump breakup. But now they're, BFFs or what. I mean, that's whatever on that. Also, shout out Tim Walz, generational bottom caller. So, Tesla went from consolidation to a really nice move in May, that beginning of the summer squeeze, back into a whole lot of consolidation. This was the Trump-Elon breakup day right here. And Tesla never saw a new low after that. I made several videos saying I thought that we would at least test those lows again, and it did not happen, right? Because I thought what made the most sense was come back down here and test that liquidity in here at least one more time. And it didn't happen. We got in a series of higher lows and higher highs, right? It was trending upward. Then comes the big news of, hey, we're going to take care of Elon's pay package, right? And that was this Thursday. Yeah, this Thursday into Friday right here. So this is our big breakout. If you'll remember, I also made several videos and posted on Twitter that if this gap remains open, this thing is going much higher, not lower. So since then, it went on a 38% run just from right there. I mean, the entire move is 45% in literally 30 days. So 45% move in 30 days, and people are upset that it pulled back. Crazy town. But anyway, next thing I want to talk about is the gaps. I keep seeing, oh, it's going to come down here and it's going to fill this gap right here. My personal opinion is that is very unlikely because of the particular type of gaps that these are. So we had the huge breakout. If you'll remember, I made the video saying I knew right here. So I took profits on a bunch of calls. And then I said, I'm going to jump in to, I told the Discord, I'm going to jump into a whole bunch of calls if we gap above this high that was the Thursday, May the 29th high. That's what we did. Snagged a whole bunch of calls. The rest is history. Now this candle right here, this is where Elon bought $1 billion worth of Tesla shares on the open market. He was buying all day between 370 all the way up to like 390 something. Okay, so we have our breakaway gap out of, and you'll hear people say things like, well, gaps fill 80 to 90% of the time. And that is true with certain types of gaps. The problem is most people don't know that there's 7 types of gaps. You have a common gap. You have a gap up. You have a gap down. You have a breakaway gap. You have a continuation gap. You have exhaustion gaps. And you have island gaps. There are 7 types of gaps. The one that fills 80 to 90% of the time, by definition, is a common gap. Because why? It's common. So The breakaway gap not only gapped above our previous day, so it's a true gap up. That's another thing people mess up all the time. A true gap up or gap down means you're gapping above the previous day's high or below the previous day's low. Well, here we go. Professor Gladman's putting his hat on. So if Tesla closed right here, if it gapped down to, let's say, 362, yes, it gapped down. And we all say it, right? Like it's gapping down. But a true gap down would mean it needed to gap below the previous day lows down here. That is a true gap down. You can say it's gapping down if it does this, but that is a common gap. Those are the type of ones that gap fill 80 to 90% of the time. So why was I so confident that this thing was going higher right here? And I said, posted on Twitter. I've got the tweet. Is it? Yeah, there it is. This was after this day right here. Okay, on Wednesday, September the 10th. I said usually once or twice a year, Tesla sets up in a way where I make 1 to 3 million. Happened November last year, June of this year. I think the next one is here. And the reason for that is just like what I've talked about with SMCI on the 200 SMA, all that kind of stuff. So you have the big gap up, the volume. Then you have sideways trading with no volume coming in. Then you have the big move where volume comes in, then you gap above, and then this is the Elon day. Like I said, the rest is history. When you have perfect setups like that, because this is a true gap up. It's not a breakaway gap. It's not breaking up out of the range, but it is a true gap up because we gapped well above the previous day's highs. Let me throw the 921 back up here. All it did was wait for that 921 catch up. The volume was super, super light. And this is where I'm like, dude, this thing's about to squeeze. And then you had the day that broke above the previous day's highs and closed above. But I was like, if we gap up into tomorrow, this thing's off to the races. And off to the races we went. So we have our breakaway gap. We have our continuation gap. So even though it pulled back, it was still an overall up day. Same thing. Gap did not fill. Now we have our Holy Grail stock setup where after the breakout happens, the ADX goes through 30, the 20-day simple moving average. Now it did not touch, okay? The low is 416.58 and it's sitting at 414.30. So if we do dip a little bit this week, all that is fine. As long as we kind of stay above this 414.50 level, I will still feel fantastic about this stock going into the year. Also, another thing that happened, so it's just bleeding off. And then what happens right before the end of the day? Trump comes out and says, I'm going to provide a bunch of tariff relief to all our automakers that make their cars in the United States. And what does Tesla do? Tesla's the biggest beneficiary to that after losing the EV credit. And now watch, I guarantee, well, I can't guarantee, because I just don't know for sure. In my heart, I feel the most likely thing that Tesla's about to do is also announce the cheaper Model Y version that's going to be like around 25 to 30,000. And if that does happen, you're going to see this thing also. So I have the confluence of the Holy Grail setup. I have the confluence of the setup that was before that. I have the confluence of holding the previous all-time highs. This is also a setup of one of my favorite type of liquidity sweeps. You guys know how I feel about liquidity. The market is constantly searching for liquidity. So what we have here, we'll go up here to the drawing board. We'll take ADX off now. So you'll see this typically in an uptrend where you're making your series of higher highs and higher lows, and it's following a trend line. Then you'll kind of have a blow off top move, right? Where lots of people, they want to chase that move. Like, oh, this is the next big one. And then you'll come down here and you'll sweep out the trend line before then moving on. And let me show you all the different ways that people get trapped here. So you have the next big push. So Tesla announces they delivered almost 500,000 cars. And I posted in the Discord that morning, I was like, this is a massive red flag to me. The fact that Tesla dramatically beat expectations, almost hit 500,000, and the fact that it's only up like 2% in the market, this is telling me that this is like a baked in deal, and more than likely we're going to get a pullback. Now, in all fairness, I did not think that it was going to turn into literally just a straight down candle, that it would turn into a 12% drop. I did not think it would turn into that, but I did think we would probably at least open up, sell off to about 450, maybe then before recovering into end of the week. So it's just going a little bit different path than what I thought, and that's okay. Yeah, that's part of trading. It's all going to plan. It's just we're going on a different path than what I thought, and like I said, that's totally fine. That's why you never get over leveraged and stay responsibly sized. But you initially trap the breakout players, right? Who think that, oh, dude, last time, Tesla had a ton of deliveries. Last time we gapped up like this, this thing, went straight up all day. What was that? Put in a 7% day and 27 points to the top side. So you certainly had the people who thought, dude, this thing's going to gap up and then we're going to run and make new all-time highs. And I would have thought that was a possibility if the gap up wasn't so small. If the gap up would have been about like a 4 to 5% gap up, like true like positivity and momentum coming into the stock before the market opened, I would have thought that. But it was a huge red flag that it wasn't gapping up that much. And that it ran before, and then when the actual news came out, it was like boop, and then that move faded. Huge red flag. But anyway, so you trap those initial ones. Then you trap the next set. That's going to be the set that's buying on the trend line. Because why? It's worked before. It's worked before. It's worked before. So you trap people who buy on the trend line. Then you start to break the trend line. And you'll buy people, you'll catch people, or you'll get liquidity coming in for the people who buy the breakdown. So just like you have people that buy breakouts, you have people that buy breakdowns. I'm a trader that will usually buy both breakouts and breakdowns. Just don't always start with a full position, because you might either have to average in where you'll have moves. Yes. Sorry guys, let me clean this up here just a little bit for you. So what I'm trying to say here is there's always, of course, no way to know what's going to happen next. I know, breaking news. But sometimes you'll have a stock that breaks out and it just continues running. And then you'll have a stock that breaks out, it does the retest, and then it continues running. And then you'll have a stock that breaks out and then comes back for the retest and then just keeps slicing. So the market is always going to keep us on our toes. There's no way to know exactly what's going to happen next. So I am a trader who I like to try to catch the majority of the move. So I like to buy the breakouts, but you got to keep your position size smaller, because sometimes you're going to have the retest. And then if you have the retest, then you go, okay, now I can add to my position. And then of course, if I fail the retest, then I got to take the loss and I got to get out of this thing. Or you can, if it is correct and the breakout happens and it just keeps going and going and going, even though you didn't take a full position size, that smaller position that you did take is obviously going to be a really good winner, and it's going to run a lot more. So you're still making great profits on the deal. So you're going to have people who chase the initial breakout. So that's liquidity number one. Then you have people who come and buy the retest. That's liquidity number two. Then you catch the people who are playing the initial breakdown. That's liquidity number three. Then you have the people who play the retest of the trend line. That's liquidity number four. Then you'll have the people who chase the breakdown of the previous lows. That is more liquidity. So this one simple setup right here traps a ton of liquidity. And then you'll catch the V-shaped recovery. So Tesla is just nosediving. All of Twitter is like, Tesla to 350 and puts are printing and I'm the smartest human being that's ever lived. And then what happens? That last hour of the day, or really it's the last 3 hours. Yeah, because this one was still the low and then reversed and then came back and tested the low. So it really was, yeah, so 1 o'clock. So the last 2 hours of the day, Tesla all of a sudden, and what do we notice about right here? Big old volume, 15-minute hammer, right over here, right around that 20 SMA, 21 EMA, previous all-time highs from November of 2021. Volume comes in, and then volume that had been favoring the bears the entire time, all of a sudden flips bullish. I always watch the net call premium in the Discord. The net call premium went from over 120 million negative to 50 million negative by the end of the day. That means in that last 2 hours, 70 million worth of call premium came into this bad boy. And then what happens? Trump announces, hey, we're gonna provide some relief. So shocking. News shows up right at the Holy Grail retest level. Shocking. This is why I say, show me the chart, we'll tell you the news. And it trapped one of my favorite liquidity sweep patterns right here before continuation topside. Now, what we don't know yet is this a dead cat or is this new all-time highs? So what we want to be careful of here is Tesla's got to get through that kind of 454 level. That 450 to 460, there's a lot of opportunities for bears to step in. That 618 to that 786. So once you're up into this discount zone for bears to re-enter, maybe they took profits down here, we've got to look good up and through here. If we look bad here and we start to roll over, now what we're in danger of is now making a new low. Now, if we zoom out, I still think that's overall, if we do that, easy for me to say, I still think this will overall be kind of a corrective move like this that kind of basically turns into a big flag, maybe coming back down here and moving out. But also very similar to like GME that put in its floor with Roaring Kitty buying a bunch in the 20s. Eventually GME came back into that area where you could buy at that same level, but it doesn't stay there long, and it effectively put in a floor. So I really think that what Elon did is buying, certainly if it does come back down here, I certainly would be a buyer. But also too, from our move, this big explosive move out of here, if this is a move 4 into move 5, which is what I think it is, those are typically much more shallow retraces, typically coming back to about the 382. And look, the 382, that's right where we bounced. That's right where the previous high was. That's where the Holy Grail setup is. And overall, I think this trend is going to continue topside and not downside. So the biggest danger we got to get is just making sure we don't make a lower high and then roll over and make a lower high. But if you stay above that 20 SMA, so the Holy Grail setup is buying that on the ADX above 30, is buying that first touch and then the second touch. And then overall, it just kind of makes that swing trading easier. So, yeah, that was an extensive chat, my friends. I hope this was helpful to you. Let me know in the comments, like, subscribe, all that good stuff. But this is why I think that these gaps were very strong. A lot of volume. The institutions loaded up all here in this consolidation. Elon loaded up here. The people who bought in here are going to protect this buy. They are, in my personal opinion. And it's just there's way more bulls right now than there are bears. So I still think that there's more juice left in that. Plus the PTSD of this type of setup before. So very similar. Like, we just don't want to see this, right? We do not want to see it to come down. And this is a perfect example of, well, no, because if you'd have bought kind of that first touch there, obviously you did real nice. But this was a perfect example. So if you start to close below that 20 SMA, that's going to be a problem. And then the biggest thing is, like I said, if this level really starts to show sharp resistance, that's going to be a problem. But overall, if we chill on top of it, even if we trade sideways for a little bit, earnings is coming up in roughly a couple of weeks, 2-3 weeks. So it might somewhat channel trade into there. But as long as we continue to put in, overall kind of these higher lows, I really like it topside still. And if that gap fills, I really think it would be way on down the road and not anytime short term. Excuse me. So yeah, like I said, hope this video was helpful to you. Let me know if you learned something new. I genuinely appreciate everybody who follows along on Twitter or subscribes here. And I hope it's helping. At the end of the day, that's all I care about. I hope it's helping. Much love. I will catch you in the next video. My friends, see you soon. Hopefully, like the video, and I'll see you soon.